In this video, I'll share with you how to invest in recession-proof US stock from the Warren Buffett's perspective. I'll also share my top 3 US stock in 2020 at the end of this video. Trust me on this one, you do not want to miss that part, so stay until the end. Hello everyone, it's Cody here. If you want to invest in US stock but don't know what to buy in a crash, the video I'm sharing today is for you. If you have any question about this video, leave them in the comment section below. If this is your first time on my channel is mainly to share about stock investing, personal finance, and real estate investing. If you are interested, please remember to subscribe to this channel and click the notification bell next to it so you will never miss any video. Let's get right at it. Before I go into my top 3 US stock in 2020, I'd like to mention one person. He's regarded as the Michael Jordan in the investing industry. He is considered one of the most successful investors in the world. Here goes his famous baseball analogy. The trick in investing is just to sit there and watch pitch after pitch go by and wait for one right in your sweet spot. And if people are yelling, "Swing, you bum," ignore them. If you have not guessed it by now, feel free to click the like button below. Yes, it's Warren Buffett. I have just revealed the secret of his investing strategy in that picture. The average return for S&P 500 index over the past 90 years is only 9.8%. Lots of investors will be very happy with that number, but yes, I said only 9.8% because Warren Buffett has been doubling this growth. His portfolio has an annual average return of 20.5% since it began trading in 1965. Therefore, I feel it is worth mentioning 3 key takeaways from Warren Buffett. Number 3, the best time to load up on stock is when everyone else is selling. As Warren Buffett himself puts it, the best chance to deploy capital is when things are going down. Number 2, buy stock with expectation of holding it for no less than a decade. So we know that Buffett only invests in stock he believes it will thrive long term. Number 1, buy high quality companies with strong brand recognition, healthy finance, and a well-established competitive advantage. These type of companies can better handle economic downturns. Now, we have witnessed how Warren Buffett plays ball. We can now get into the best part of this video, my top 3 recession-proof US stock in 2020. Stock number 3, Coca-Cola. Coca-Cola is a non-alcohol beverage company that has refreshed us over a century now. Coca-Cola is one of the best recognized brand names in the world. Here are 4 key facts. Fact number 4, speed to adapt. The US population had become conscious with its health. Coca-Cola was the first to come up with a diet version of its favorite classic Coca-Cola, which has now become the second most selling soft drink after regular Coca-Cola. It has also put a lot of effort into creating and marketing healthy alternative for soda. Its healthy alternative including brands like Dasani bottled water, Minute Maid juice, and Powerade. Fact number 3, dividend increase. The stock has a very good dividend history and is currently paying a dividend of 3.6%. Oh, if you're concerned about its raising its dividend in 2019 and beyond, don't be, because Coca-Cola has increased the dividend for 57 consecutive years. There are dividend aristocrats and there's Coke. Some people think Coke is boring, but hey, boring gets the job done. Fact number 2, recession-proof. Bull market don't last forever. Let's take a look at Coca-Cola business over the course of the last financial crisis between 2017 to 2019. You actually saw its revenue rose double-digit year over year. Its business performed even better during the last economical downturn. Now, the fact that Coca-Cola's business performed well through the recession doesn't mean that stock price wasn't impacted. The share price actually dropped by 37% while the company's fundamental remained the same. As of today, the share price dropped about 25% from its all-time high. I'm not sure about you, but it seems like a great buying opportunity to me. Fact number 1, Warren Buffett's favorite. Coca-Cola is one of the Buffett's favorite stock after he began purchasing the stock in 1988. Berkshire Hathaway now owns 9.3% stake in this company. The company has sustained its performance over the last few decades and continued to gain market share. And at the end of the day, who doesn't like to get paid some juicy dividend and drink some Coke? Stock number 2, Apple. I have many reasons, but I only share the best 3. Reason number 3, iPhone and wearables. The company is undergoing another transformation as a market leader in wearables. No competitor has yet proved as successful as Apple. First quarter in 2020, it represents the first time net sales in division including wearable exceed the company's iconic Mac division. Now that the wearable division is steadily growing, the trend could signal Apple's revolution beyond the iPhone. Like it did with the smartphones, Apple is positioned to be the best industry leader for wearables. Apple is also preparing to release 5 new iPhones in 2020. Although it might be delayed, we're expecting to see this here we go again scene. Reason number 2, reserve of cash. As of December 2019, Apple has over $200 billion in cash and marketable security. To put that into perspective, the entire market capitalization of Disney is roughly $150 billion. The sum is surely a sufficient stockpile to survive whatever period of economical uncertainty we're facing in the next several months. Apple also invests in highly rated security and buys back their own share. In the most recent quarter, the company repurchased $20.7 billion of common stock, which bought 70 million Apple shares. That means the company paid an average price of roughly $295 per share. The last time I checked Apple stock was at $247. If the stock price continued to fall, it increased the possibility of more massive repurchase. And if Apple is happy to buy back their shares at $295 or $247, I will be more than happy to buy their stocks at an even lower price. Now we come to my number 1 reason, and this one never failed to amaze me. Apple's product and strategy. Apple demonstrates simplicity to its best. We don't need more complex products or marketing to overwhelm us with more information. Apple understood this concept early on and makes sure that it's as simple as possible. I believe most people out there are just like myself. I just want my phone to be easy to use and look really cool. Using Apple product also makes us feel like it stands for something. I invite my friend Steve Jobs over to explain this using the Nike analogy. Trust me, no one can explain it better than him.
What does Nike do in their advertising? They honor great athletes and they honor great athletics. That's who they are. That's what they are about.
There you have it. You can leave a comment below to tell me what using Apple product stands for you. To sum it all up, Apple has a unique strategy, enough cash on hand to survive even the prolonged global recession. Eventually, contracting economical activity will give way to expanding, and this incredible tech stock will be on the rise again. Before I show you my number 1 stock pick, I'll show you a short clip from Warren Buffett himself.
And within Berkshire, I could pick out 3 of our businesses, and I would be very happy if they were the only businesses we owned and I had all my money in Berkshire.
So if Warren Buffett could pick out 3 Berkshire's business, and he will be happy if those are the only business that Berkshire owns, and they have all the money in it. Now, if Buffett has all his money in Berkshire, would you say that maybe, just maybe, the top 3 most valuable investment in Berkshire are the same 3 business Buffett was talking about? Now, let's introduce my number 1 stock pick, Visa. I'll give you 3 key reasons why. Reason number 3, if you have a Visa card, your transaction will make on the world's largest payment network. A payment network acts as the technological background between you, the consumer, and a merchant's bank. You are using your Visa credit whether you are shopping in the physical store or online. Visa remains as one of the most obvious players that benefit from the world's shift to digital payment. Reason number 2, open loop credit card. Visa runs an open loop credit card system, meaning it doesn't directly lend money to consumers. Instead, Visa makes money by taking a small slice of each purchase facilitated with its network. While Visa doesn't make money on the interest of its users' card debt, it also doesn't face the credit default risk. In contrast, Visa's biggest competitor, American Express, runs a closed-loop credit card system. The negative to that business model is that it exposed the companies to credit risk. That means that during an economical downturn, when a consumer loses job and cannot pay their bills, Amex is left holding the bag. And that's why even though it's Buffett's 4th valuable holding, I still pick Visa over American Express. Reason number 1, blockchain technology and cryptocurrency. Visa has fully embraced new technology and forms of payment, including blockchain and cryptocurrency. In 2019, Visa signed up Coinbase, one of the major brokerage from buying, selling, and holding Bitcoin. The new deal will allow a Visa cardholder to pay for goods and service from a Coinbase account using cryptocurrency. More recently, Visa announced a partnership with Libra Association, a governing body overseeing the new Libra digital currency proposed by Facebook. Though some may think that new payment technology is a threat to Visa, the company is determined to partner with every form of payment out there, and it opens to its world-class network to those flows. I know, for you smart people, you might be saying,
But Cody, you said if Buffett only owns 3 companies in Berkshire, it makes sense to be his top 3 valuable investment.
I'm glad that you noticed that, and I'll tell you why I'm not looking at Bank of America at the moment. I'll start with reasons to concern. the bank's income is divided into two main categories: interest income and other income. Interest income bringing in more than 50% of banks' net revenue. With recently cut interest rates, it's generally bad news for the banking sector. It means most banks are most likely to earn less revenue on the loans while other things remaining equal. More importantly, I don't like their stock price and dividend history. Bank of America has gradually increasing your dividend along with the stock price from 1990 to 2008. When the stock price plummeted in 2008, the 43.65% of dividend was short-lived and soon to be reduced to 1/10 of the dividend payment before 2008. And it continues to hold the dividend steady until 2014. That is 6 years after 2008 that dividend finally started increasing. Also, it's worth mentioning that the stock price never recovered back to its previous height of $41 in 2008. Therefore, if any investor has purchased the stock back in 2008, they might still be waiting for the stock to come back to this level. However, it's worth mentioning about the cash on hand. Bank of America held a healthy $673 billion cash as of 2019. Why is it essential for a bank to have so much cash? In banking, liquidity is the ability to meet obligation when they come due. As an individual and business start withdrawing more money and loans to keep ends meet in this market downturn, it's important to make sure that there's enough money to be withdrawn. Sorry, Buffett. Due to the fact that the Bank of America might run into some trouble and its stock price and dividend history, I'm not considering this stock in 2020. On the flip side, it will most likely come out of these trouble in one piece, nevertheless. To sum it all up, I feel strongly about good growth dividend stocks like Coca-Cola, Apple, and Visa, especially during a downturn in the market. Good quality stocks tend to outperform low quality stocks. Also, they manage short-term risks and never lose sight of the long-term innovations. In the future, if you want to hear more about good quality US stock or any stock you're eager for me to analyze, let me know in the comment section below. If you want to learn more about recession-proof Canadian stock in 2020, I have included the link above. Hope you're all investing carefully in a time like this. No one knows where the bottom is, so don't spend all your money at once. Anyways, thanks for watching. If you like video like this, destroy the like button and subscribe and click the notification bell right next to it. And I often update my Instagram and Facebook so you can follow me there as well. See you next time.